Well, hi everyone. Welcome to the Buffett and Beyond Research Saturday Market Recap Letter for August 26, 2023. And remember, folks, if you want to live on this beach like Jimmy Buffett, you've got to learn how to invest even better than Warren Buffett. And for those of you who don't have a free subscription or a full paid subscription, just go sign up at buffettandbeyond.com and you can get a 2-week free subscription of our daily letters as well as our 3 videos that we have on the weekend. So folks, just go sign up. And well, this week the market pretty much standing still. Well, it goes up, it goes down, but it's trying to absorb the great earnings of NVIDIA as well as the comments from the Fed Chief Powell on Friday. Rising or high interest rates may still be with us for a while, and the market doesn't know how to react. And NVIDIA, the stock analysis video, NVIDIA was all over the news as earnings increased over 4 times. Get this, 4 times for every dollar reinvested back into this company. Actually, for every dollar invested, $4.25 came to the bottom line. That's amazing. Yep, just like I said, it doesn't get any better than this, folks. And the Home Builders ETF is not only outperforming the S&P 2-to-1 this year, but outperforms the S&P by about the same amount over 5 years. And this year's top stocks, well, when back-tested, outperformed the S&P well over 2-to-1. As we said last week, that ain't working. That's the way you do it. And the market, well, here we are. These are the volatility bands, folks, and you can see we went below that band, came back, and we have been within the band, went up to the 20-day moving average. And folks, just plain got rejected there in the same day. In fact, the market was up almost 200 points and then fell down 300 and some points. So that was a tough test of that 20-day moving average, and the market participants didn't like it. But then on Friday, when Powell spoke, the market went up, the market went down, and as I'm writing this just before the end of the day, it's kind of sitting there doing nothing. So we'll see what happens next week, folks. But it did go down and tested the 4,400 level back and forth, and it wants to get above it right in here. So we'll see what happens. And down here, we are very oversold now in the market, and you can see this blue line wanted to go up and cross the red line to the upside, came back down again. So it's down here just trying to make that turn. And we'll see what happens as we come into this new week. Don't forget, next week is the last week of the month, and Friday starts a new month, September, and we usually have a pit bull low during next week, just before the market changes months, and then it drifts slowly. The market drifts slowly up a little bit. But we're also coming into September and October, which are not exactly strong months for the market. And all the kids get back to school. So let's look at the S&P one more time, and this bullish divergence is still in effect here. So that's the one hope we have. Down here, this green line is the 20-day moving average. The blue line is the 50-day moving average. And you can see that the 20-day moving average has crossed below the 50-day moving average. That's not a good sign. And the QQQs and the Dow are all sitting below their own 50-day moving average. And as you can see, the other day when the S&P went up to test the 20-day moving average from the previous chart, it also tested the 50-day moving average and failed. So we're right back in here, folks, and this market just doesn't know what to do. We don't like where it's sitting. We did draw this line in last week that maybe gives us some hope of support. But down here, and that's quite a ways away, 200 points, 250 points. The red line is the 200-day moving average. We really don't want to see the market go down to test that, because inflation is coming down, and we have to ask that age-old question: do you think the market's going to be better a year from now than it is now? And of course, everybody answers yes, because inflation is coming down. The Fed does have control over inflation. The thing is, we don't want to see a recession in order to get rid of inflation. We want to see a nice soft landing. Actually, we don't want any landing at all. We just wish the market would start taking up from here, but this is going to be a tough test in here, folks. So portfolio protection, yes, we have the SPY 410 puts. Remember, the SPY is 1/10 of the S&P 500, and the symbol for the S&P 500 is SPX. This is the SPY, and they call it the spider. So for a $135,000 portfolio, we have 3 puts, and we stagger them out so we could ride with the market up and down. These puts are about 5% below the present level of the market, and we will just have to see what happens. But those of you who have these protective puts are sitting there and saying, well, we don't want the market to go down, but if it does go down, say 10%, we're protected 5% of that. We're protected 5% below the present level of the market. And then after that, we're pretty well protected, so we don't worry about a further fall. So we do have portfolio protection, and we write about that whenever we roll these options over. So, folks, we had a tough week. We had a tough 2 weeks. We've had a tough 3 weeks. And the market just doesn't know what it wants to do. But if you want to sit here on this beach and watch the sunrise like Jimmy Buffett does, then, folks, you want to learn how to invest as good or better than Warren Buffett. So, folks, you go out, have yourself a great weekend, and we'll see you back here on Monday.